What is up? Morning. Oh, look at you guys. Kind of hopping in. Cool. Welcome to anyone new, by the way. I think we got a couple new people hopping in. A couple different ads last weekend. Crazy market already. So, all right. So I'm just gonna hit this really quick. Looks like we got some stuff kind of playing out. For the most part, volume's kind of dying down right now. Sorry, I'm looking all over the place. If you guys don't know, I have like 7 monitors that I'm watching at any given time. So it's a little bit much, but it is what it is. So anyways, if you're new, again, welcome. Guys, this is just what we do every Monday. So every Monday, sometimes I'll have some of the extended crew hop in. If they do, I'll let you know. I don't think I have anybody hopping in just now, but they always have a free invite. Of course, but we are professional traders. So what we do, I say we, right now it's just me. So I'm a professional trader. What I do every morning, every Monday, just like in the corporate world, is really just kind of go over what happened last week, what I'm looking for in the weeks to come, or this week, moving forward. So we'll hit a lot of the economic data, we'll go over some charts, find some key levels, and a handful of trades that I'm kind of looking at. And then at this time, if you guys, hopefully you guys can hear me, at this point, if you guys have any tickers, send, I'm going to type in chat right now, send requests here, right? Go ahead and send them in the chat, and then by the end of this, we'll go ahead and hit those and find some levels, some triggers, and some likely targets if they look good. And you know what? If they don't, then that's what we'll say also. So maybe some neutral trades. But again, and my mouse is flying all over the place, so sorry. We're going to go over some stuff. I'm going to look at some option trades. So if you're not an options trader or if you're new to options, either way, Meta got it, Tommy. Just basic disclaimer, right? Call 188 options before you start trading and get a copy of characteristics and risks of standardized options. So that said, let's hit this. So I'm just going to do a quick recap. There was a ton of stuff last week, and I mean, like, it was a busy week. And last week we were going over, was it sell Rosh Hashanah, buy Yom Kippur? And if you don't remember, this week, I think tomorrow is officially Yom Kippur, the start. So we'll see. If you had sold Rosh Hashanah for sure, that was a bloody week, man. And we ended up with the quarter pretty red as well. So the reason that kind of all happens to coincide with each other is really the last day of September. That's the third quarter of the year. Actually, a lot of companies, like lot of larger funds, end a fiscal year, not a calendar year, on the end of November, September. So for some companies, that was actually the end of their what they call fiscal year. So that kind of kicks off a lot of rotations and a lot of larger funds. If you're looking at like tax loss harvesting and things like that, people might sell some of those beaten down names and kind of try to capture some of those tax write-offs. So that's, I mean, tactically, what you look at it, seasonally, we're looking September, seasonally, on average, the bloodiest month of the year, hands down. In general, like entire market cycles, which are, I think market cycles technically just under 5 years, the midterm election year and the midterm election year's September, and the last week of that midterm election year's September is the bloodiest week of the year. So we're over. Hopefully it's gone. I try to look for some good news. It's really tough, man. It's really been tough on this market. But that was it. So we'll see. I think personally, I see a lot of short potential trades for sure. But I'm very hesitant to pull any big triggers right now. I'm gonna lean a little bit more neutral than anything else. So hopping into some of these headlines, man, it's brutal out there, right? So one of the bigger headlines last week, we had Europe, I think the Bank of England, if you guys didn't know. I don't know if I have it on here. Probably not. Bank of England did quantitative easing, actually. There's a big Forex kind of headwind, and that actually helped out their market, but we'll see if it actually did anything. It actually changed the Dixie. So the Dixie, in terms of charts for us, the Dixie DXY has been the number one most important chart that I've been watching for, months now. But the second that QE started over there, or the dollar actually started to like teeter out a little bit, and it's slowly coming back down. So that gives a lot of like breathing room for stocks. Specifically, I'm thinking like precious metals, things like that. But we're really not. It's not over, right? The rest of the headlines, man. I don't know if you guys saw like housing prices. We've been watching this home housing market for a while. Sales finally started to come off. They're actually coming down, and it was actually the first time that housing prices fell in 10 years. That said, it's a tough situation. Like I was trying to sell a car. I have an extra car, and I'm like, I want to sell the car because I can get a good price on the car. But then if I sell the car, it's like, well, I'm probably just going to sit on cash just because I don't need it. But if you needed to buy a car, it's like, well, what are you going to buy? Everything's freaking still so expensive. And it's the same thing. What's up, Nick? It's the same thing with houses right now. It's like, okay, well, you could probably sell your house, but what are you going to buy, right? And it's like, everything's so freaking expensive still. And like on top of that, well, the mortgage rates, 15-year high, it's almost 7% for national average 30-year fixed mortgage, which is insane. I was thinking back, like my grandparents probably paid, a tenth of their price for their houses, but they were at like 15, maybe 20% interest rate back then too. So hopefully that's not where we're going. I don't know. But we'll see. And a couple other headlines. I think there was a Bank of America downgrade on Apple that actually kickstarted a lot of the sell-off as well. Nike earnings was a shit show. Sorry, excuse my French. I think I have a bleep button. I'll figure that one out later. But it was. In general, we have earnings season coming up. We have the Christmas season coming as well. We'll talk about Amazon here in a little bit. They're kind of doing a second Prime Day as well, which might be a little catalyst for a potential trade. But I think the market in general, it's like they're looking at these retailers like, okay, yes, you're building inventories, but at the same time, if you can't sell them because the Fed is trying to slow spending, you're going to have to cut prices, your margins are going to drop, and you're going to be stuck with high overhead for holding all this extra inventory. So that's kind of like the battle that they're in right now. So we'll see. They've been beaten up pretty bad, so I'm still just kind of feeling a little bit more neutral. We had an OPEC cut today. I think it was the news. So oil's on heavy watch this week. It's $1 million production cut a day, a million barrels per day production cut, which in the grand scheme of things isn't really that big, but the headlines move the markets, right? So if you look at oil today, nice move to the upside. We'll see how long it lasts. I was watching Oxy and them. There's a gap to the downside, so definitely be aware of that for sure. Oh, I am so sorry, this thing. All right, so that's for the most part it. So there's a couple things, and it's already out, right? So it's a little late now, but Tesla had this AI day, which was like a nothing burger to me. I think there was some releases. If anybody knows what it was, I know there was a lot of other releases for Tesla, but they missed deliveries for sure. And it's like Costco. Costco actually, I don't know if you know, Costco reports their quarterly sales or their sales and everything monthly, so that's why they don't typically move a whole lot on earnings. Tesla's actually the same way, so they give very frequent updates. They do have earnings coming up. I don't expect a big move. They don't typically move massively because they update so frequently. But I'll see if I can find this. But it was definitely Tesla delivery miss. I think it was a delivery miss. They shut down a China factory, so a little bit poor on the outlook. Yeah, third quarter production and deliveries report is Tesla reported 343,000 total deliveries compared to 365,000 produced. And so 343,000 deliveries. Market was expecting 364,000, so they missed by like 20,000. Nothing major. The stock sold off like in an epic manner this morning. I think it's probably going to bounce a little bit here, literally like right here, and there's an upside gap that I'll watch. It's going to be on heavy watch up to 265, and we'll go through the charts in a little bit. But heavy watch on the upside gap, possibly gap fill, and then flip to the downside. So that's a big watch for me, actually. If we do get that trade, I will be hitting it for sure. So again, Amazon Prime Day on watch, second Prime Day. I think that's today or tomorrow. I don't know if anybody knows. Type it in the show notes or the show notes, the chat. By the way, if you guys aren't subscribed to the channel, if it would be awesome if you could just like this video, subscribe to the channel. We just kind of like slowly building this up, so we don't have a whole lot of subscribers. So anything you can do totally helps. Love it, much appreciated. Disney, there's actually some Disney news also. So Disney added a new former Facebook exec to their board. There's a deal on deck. That thing was based in around 90, so I'm gonna put that one on watch. So I'm typing in the chat. So we got Meta, right? We got Tesla. We got Disney. If you guys want to look at Amazon, sure, we'll look at Amazon. And I think that's, for the most part, it, right? A lot of retail stuff. Cool. All right, so now we get into the macro, right? So here's the recap of the headlines from last week. So Wednesday, there was a major, that was like Powell's speech. So we're going to take a look at that. I actually thought that we got FOMC minutes this week. I was wrong, so apologize for the thumbnail. That's what that was for. It'll be next week, and we'll get the FOMC notes. I believe. Yeah, I'm just double checking. Yep. But again, so this is last week, right? So new home sales. This is durable goods orders, really not a big deal, right? New home sales. This guy, it says it came in slightly higher, but pending home sales month over month down 2%, and consensus was 1.4. Not a big thing, so it's not going to be a major market moving kind of event, but I do want to put it on your watch. It's on my radar. Just like this is like this beginning of the potential downside fall in the housing market. So just put it on your radar. And if you got some extra rental properties or something, I don't know. I'm probably just gonna keep mine and just rent them out. Seems like the better thing to do. I'm not flipping any houses, none of that kind of stuff. So again, pending home sales down year over year, right? Pending home sales is down 24%. So yes, we did have higher home sales that actually went through, but pending, no good. So that's going down. And then of course we'll take a look at how did Powell's speech affect the market. GDP, we got the final GDP numbers in last week. So I don't think this wasn't going to be a surprise for anyone. I mean, we basically get 2 or 3 previews of GDP pricing ahead of the actual final number. So what's really on watch right now, and if this is the bottom of at least this dip, I don't know for how long. One of the things, there's 2 catalysts moving forward that we could look forward to, and that's Q3 GDP outlook. So if that's not as bad, or maybe like green for a little while, that would probably flip the market, right? We have earnings season coming in about 2 weeks. That one I'm a little bit more concerned about. I'll show you guys what that looks like from the, I have like a year plus data's worth of earnings data, and who's beating, who's not, and what the trend is over there. That's the thing to watch out for. I think, we are declining from an earnings perspective, and that's kind of like the lifeblood of the market. So definitely something to be very cautious of. And personal spending, right? So we got personal spending numbers last Friday. Oh my goodness. I'm looking at this, I'm like, okay, we were down 0.2% last month. Market's expecting 0.2% like coming into the upside, and the Fed's just trying to slow the spending, and here we go, right? We're up almost 0.5% month over month. Like, this is it's like the Dixie, the dollar, right? Like, these are backward looking numbers, by the way. So we had all the extra gas and all that kind of stuff going in. We got rents going up. We're not buying more stuff, I don't think. I just think that the stuff that we are buying is freaking more expensive. So, I mean, yeah, okay, personal spending dollars go up. So that's what I'm looking at there. I mean, just across the board, though, I'm not sure that everybody's going out out of their way and spending. I think most people kind of hunkering down. This was a chart I just grabbed off TradingView. It's actually just kind of like the sectors. So of all the sectors, where do you want to be if you are investing? Like, take a look at this, right? So the utilities, XLU, had a heavy downside week last week. So did energy, XLE. But these two actually have been leading the market. So if we do flip up to the upside, that's the area where I'm actually going to be looking for some of the stuff. If you want to get down and dirty into like your super high flyer tech, things like that, you might be able to get some bounces on maybe a mid cap level, but I'd be very, very weary that those really just could see more downside, right? Like, I don't think that we're quite over yet. Listen, we still have to get through Wednesday, we have a big non-farm payroll this week, Friday coming. So just putting this on your radar, right? Like, if you are investing, that's cool, right? Be aware of where the strongest sectors are, and that is energy, utilities, and then healthcare coming in right behind that. Staples, XLP is Staples. Staples got hit actually pretty hard last week. Also, that's more of like if we are not spending as much, who is not going to get that money? That's like your Staples. Like, I think it's like, are you going to downgrade your toilet paper or your toothpaste? Like that kind of stuff. You're still going to buy it, but maybe not necessarily in the brands that you're buying in the stock market. If that makes sense. So this is the earnings review. So this is what I want to look at. And this is a year and a quarter. So every Monday, actually, we go through this, add this up, and we take the Dow 30, major Dow 30 components. So of the Dow 30 components, right, Q2 a year ago, 29 beat, 1 miss. From there, 27 beat, 2 miss, 1 meet expectation. 26 beat, 4 miss, right? You guys see this trend? Here we are, Q2 this year, 24 beat, 6 miss. That's where we landed. This is actually this is the decline in the market's earnings, right? Believe it or not, Nike actually beat expectations, but you can see the stock price. Whether or not they beat an expectation or not, or beat their it's not expectation, it's their number, has nothing to do with what the stock price is going to do. That has everything to do with the consensus or the whisper numbers, and we'll go through that in a little bit. But again, I guess Microsoft missed, Boeing, JP Morgan. I mean, Intel is just in the dumpster, but take a look at this stuff, and this is like, wow, okay, this trend is not in our favor. So like I said, why be super cautious even buying into this dip? Although technically it's supposed to be the best dip that we have in the 5-year cycle, just caution, right? So this week we really don't have a whole lot coming in. So I do think that we could either base out, maybe go sideways for a little bit, at least for the first few days, we'll see. But Friday, that's our biggest day of the month, right? So this is the first week of October, and you guys remember every first Friday of the month, we get this non-farm payroll numbers, and that number is the most important number of the month, right? We'll take a look. Typically that day, it's not going to be a big intraday mover. Like, it might be a little intraday mover, but it's the following few days of trade after the NFP number comes out. How the market digests that number, I mean, like 80%, probably, anyways, that's going to determine what the rest of the entire month looks like. So if after Friday, the market digests this NFP number and likes it, whatever it comes in at, we're probably in for a Santa Claus rally. I don't want to say it, but something like that. But if not, just want to stay on guard, right? I think that we could have the first couple pops might get slapped down pretty quickly. So short-term trades, just keep it tight and take profits quickly still. So here we go. We're going to run into the week moving forward. So not a whole lot of earnings. Like, we have slim to no earnings this week. We're going to start earnings season in a couple weeks coming up. When I go through this stuff, right, so there's actual, previous, and consensus. Actually, for the next few days of the week, there's not going to be actual. We just have this because they've already happened. There's previous and there's consensus numbers. So what moves markets is not the deviation from the prior, right? It's how far the actual number comes in versus what the market was pricing in, or the consensus. Consensus number means this is what the market is priced in currently for right now. So if it's different from the consensus by a slim margin, not likely going to move the market too much unless it's a big, really important number. If it's a massive difference, that will likely move the markets, and that's what you're looking for. Last week we had like 20 Fed speeches. We still have more. So we still got 4 Fed speeches today. Moving forward. Oh, and by the way, this time here, I'm on the West Coast, so this is Pacific Standard Time. Sorry, guys, you're gonna have to adjust for your own time zone. So do the math. If you're Eastern, 7 a.m. Pacific is 10 a.m. Eastern. Here we go. So job openings. So JOLTS, right? That's the job openings. Not how many actual jobs are taken. It's just the openings that are available. So previous consensus, right? So consensus is what's important. Do we think that the economy is opening up and people are available, or companies are opening their jobs so that people can apply? That's what we're looking at, right? Factory orders, probably not going to be a market moving event. Job quits, though, that is fairly important. So that's how many people are quitting, right? Like, or, not working anymore. So that's, you do want to keep that on watch. JOLTS typically doesn't move the markets, actually, but it is something to keep in mind, especially if we're talking about this quote-unquote recession or not recession, redefining what recession is. We've had 2 negative GDP quarters in a row. That's recession. Whether or not somebody tells you it is or isn't, they're going to make an excuse of why they feel like the definition can change. That's fine. But just know that that's what it has historically been, and that's where we are right now. And 5 more speeches Tuesday. So I think that's most of them, actually. 30-year mortgage rates, this is another one. I'm watching TLT right now, and just the bonds in general. Looks like we're getting a little bit of relief right now. Hopefully they bottomed out. So I hope that we're at kind of like peak-ish interest rates. And again, the bond market prices in, just like the equity market, they price in what they believe is going to be coming down the road, not what it is right now. So hopefully that's mostly priced in through the end of the year, but we'll see. I do have an iron condor on that I'll probably have to adjust here. Probably this week, we'll see. And then ADP unemployment. So historically, ADP has been like the precursor to the NFP, but this thing during the pandemic has been such a shit show, like way off. I mean, if it consensus is 200,000, we'll see. So this is new jobs, and if it comes in at 200, I'm kind of torn. I don't know if this is going to be a good news is bad news situation. It very likely can be. And so when it comes to the jobs situation, so we need to have spending go down, right? And I'm just going to move this forward. So there's nothing major Wednesday and nothing jobless claims Thursday. And then we'll get into actual NFP on Friday. So and this is where we are, right? So consensus is that we have less jobs than the month prior. And consensus at 250,000. If this is below consensus, I'm torn, right? I don't know. I'm very much torn. It could be a good news is bad news event. It could be a bad news is good news event. So like if we have a lot of people going back to work, what happens then, right? Like people will tend to spend a lot more, that kind of stuff, and that's not good for our inflation numbers. That's what I mean. Like if that quote unquote good news might have a bad market reaction. I gotta wait and see, really. So I'm gonna be very patient on this one just to see how the market digests that. So this week, I'll just tell you right now, super light for me, ultra light, very, very small positions. Most of it's gonna be on next week, and then if I can get some like primo entry setups, like the Tesla or might be some Netflix stuff happening, we'll look at those, right? Otherwise, very small targets, not quite scalpy, just my typical 2 hours in a trade, give or take. And we'll go from there. So non-farm payrolls, right? Biggest number of the week. Friday, the biggest day of the week. I'm going to be lightening up for sure by Wednesday, and then we'll see how it goes. Typically, the market will start to price in what it thinks is going to happen on Friday for this event. Tuesday afternoon, some of Friday, it'll probably overshoot it, and we'll come back Thursday a little bit lower, and then Friday we'll have the actual reaction. So honestly, my guess is that we are sitting here Friday, probably exactly where we are today. Or somewhere thereabouts. So, you know what? I'm going to line up an Iron Condor for this week because I honestly think that that's a very, very real possibility. We'll see. All right, so that's it for that. Enough of the macro shenanigans. I'm going to pull up a chart here. We're going to take a look at this. First things first, I'm going to do a 30-minute chart, right? And I'll go one at a time. So if you're new to this, on my charts, I do have extended hours on, so they'll look a little funky. These orange boxes here, these guys, this is an average week's range, right? So typically markets do not move more than an average week's range, and if they do, you know, that's your target, right? So I'm going to take an average week's range from today's open, which, by the way, is right here, right, to the upside, right? So from the open to the upside, an average week's range would actually take us to 375. So I'm going to mark that. That's going to be the first level, let's say on an Iron Condor. Oops. 375, and then the week ends on the 7th. We'll see. So 375, all right, we'll see. All right, 375, average week's range to the upside, right? And that's actually tags this order block right here. I do want to take a look at Wednesday, the 28th. That was right here. Wednesday, 28th. When did we have his speech? Last week. When was Powell's speech? It was out of the gate in the morning. So this is the day that he had his speech. I'm going to put this line. Oops. I want vertical, actually. Right there. And I'm going to find an order block. This actually lines up really well. So 7:30 my time, he starts right about there. Is when he starts yapping. Yeah, so this candle right here is where he started going. And actually this lines up pretty nicely to this level here. So right in here is going to be my probably like critical level, which we hit almost exactly this morning. Let's see how that works. So the reason I highlight these kind of like fundamental events is a fundamental event will typically create a technical level. So they're super important, right? So just keep that in mind. Today, so on the downside, an average week's range would actually take us to 350, 348. I'm going to tag that level. I have no idea if this lines up with anything. I know we got 356 lining up with something. I might have to pull this way back to find, is there an order block? Yeah, so this is right in this level, 347, give or take. So we have these kind of wicks. Yeah, 350, 1, 2, 3, 4, 5, right? This is clearly a level where price bounced up off of, clearly a level where price, well, this was resistance for once, twice, 3 times. No such thing as a triple top there, huh? 1, 2. Sorry, I'm yapping. And that does fall somewhat within, right here, an average week's range to the downside. I also have this kind of broadening formation. I don't think that this would happen now. This is how people basically get to that 330 level, give or take, just taking all these lows. Oops. And lining them up. Yeah, it would put you around here. We'll see. I don't think we get there, but I'm looking for what feels like panic, actually. That would be ideal for me. This was that. So we bounced here right off the 358. I'm not feeling panic, that's for sure. So 350 to the downside, 375 to the upside. Let's see if I can put like maybe, that's cheap. Yeah, you have $5 Iron Condor, selling 375 call, selling the 350 put this week for, it's going for $1.15. That's probably a layup. You know, if you're not a credit spread trader, that's probably not the best risk reward, but probability wise, you're very high on that. All right, so moving right along. Other than that, so we do have this 358 level that was prior support. This green line, remember we just saw that a second ago, that tags this top right here. And so in this zone here, it's an 8-point zone, maybe 9-point zone. I'm being very cautious, very, very cautious. And that's kind of what we're seeing right now. Red line is quarterly low, by the way, which was Friday's close. All right. So Friday's close, you might be able to trade this. If you got something like this, you might be able to trade this. There, I'd be super, super cautious there. Otherwise, this level, 365, right? If we go up, you're gonna do this. I wanna see it bounce up and then 375 to the upside. Two options right there for directional trades. All right, Q's very similar. So again, orange box, average weeks range to the upside. Ooh, I'm not ready to go that bullish, but just measuring, right? This could bring us to 285, which is actually right here, the bottom of these can of candles. So if you do play an upside trade, the purpose of this is like, okay, that's your target. You get there, you close her out, because your probabilities are very low of extending past that. To the downside, 253. Let's see if we go. 253. Does this sit on an order block? Yeah, it does, right there. All right, so 253 potential like bounce range, and then I want to take a look at, I have these fibs here. I can take some of these levels down, sorry. Down. Down. Don't need. Wednesday was the 28th? Yeah. So right here, one more time. Wednesday's here. This is Powell's speech. Like kind of right at the open. I'm gonna grab this whole order block here. This is your supply up here. So I could take it long above 275 up to 285. That's a trading range for sure. I want to see something like this. These are for, when I say trade, like 2-session kind of swing trades. Otherwise, here's your low. We need to see a break of structure, really. That would be a break of structure here. If the Qs did get up over 275, that would be a break of structure. If it bounced up off that and continued higher, that would be a change of character. That would be good for the upside bounce, but a small little nibble. Otherwise, pre-market lows today, 265. Feels like a long way away. Otherwise, you trade this range, right there. And then if you get below that next range, really down here, 265 to 254 to the downside. Interesting. That's what it is, though. Cool. I'm not going to do diamonds. If you guys want to do diamonds with the Russell, that's fine. I'm just going to kind of move on. I'll throw AMD to the mix for sure. VIX, as an option trader, hey, look, we always have to have VIX on our radar. I don't think the VIX is going to go anywhere, really, right now. If anything, it might be a slow chop to the downside until we get that, like flusher kind of moment, right? And so what a flusher moment looks like for the VIX, that really looks like 45, right? So 35 plus, closer to 40 on the VIX. That's time to cover your shorts. That's time to look for some bounces. It's scary to do that, but that's when you want to, like, okay, stop, flatten out, look for the next trade to come out. So Dixie here, most important chart in the market, really. So Dixie, if the Dixie can get back down below 111, that's going to be massive. Even right now, if it's chopping in this kind of like this level that it's stuck on. So remember, we're at like 20-year highs on the Dixie, right? Like the last time we were up here was 2002. 2002, right? Like what happened in 2002, then 2008, right? Like 2002 is the last time we're up here, dot-com boom. That just blows my mind. We do have like an order block here that you'll run into at 116. So are we close to the end? Probably, but we're not there yet, right? Typically, this stuff ends in a dramatic fashion where it's like, boof, we go to 120 on the Dixie, and then boof, 110. So that's the kind of situation I'm really looking for. If we can kind of stabilize here, I think that would be good for some things like precious metals. Below 111.50 should be bullish for stocks, right? And you have this, you got this like 111 kind of order block right here that we want to really be worried about. So as long as this thing's not going up, if this goes back over 112.5, I just got to be non-bullish bias for sure. So that's what I'm looking at. TLT, again, same kind of thing, very, very much range bound. So I'm thinking here maybe like $5 wide condor, selling $100 puts, and probably 110 calls. Probably got 2 to 3 weeks out on that guy. So, all right, crude oil. By the way, we had crude oil gapper to the upside this morning on OPEC news. This could be a gap and go situation, so I don't need to see this fill, but I absolutely want to be aware of it for sure. 20 days here, kind of this gray line, kind of pulling in at about 83. This is crude futures, and you don't have real resistance until, I guess you just hit it. This kind of like dashed line. If crude can get over, what does this look like? I mean, if crude can get over 87, I mean, you're going straight. If crude can get over 84, it should be going to 88 quickly. Might be able to have a USO trade. And then after 88, the 200 days at 96. And that's kind of lining up with these little order blocks up here and this next zone to the upside. But for now, we'll see. It's not quite. I mean, these are quick trades. I like to look for something a little bit more sustainable, but it looks like that should hold to the upside for sure. All right. So what I'm going to do here is I usually have, so when I do something longer term, or we're going to do just an analysis, multiple time frame analysis, right? So I have weekly down here on the bottom left, daily, bottom in the middle, hourly on the right. Oh man, Tesla just can't get it up. 240. It's not flushing though. What I'll say for sure on this chart is that since it can't completely flush to the downside, it likely has to go up. The question here is that this move after such a big opening move, this is no good. This is death by 1,000 paper cuts is what I'm looking at right here. So if you're sitting in a Tesla call waiting, I know I had some earlier today, you guys just be very, I don't know where you're going to be right now on the IV bleed on this guy, but that looks brutal. The tighter that this range gets, the less volatile this stock is, and after having this kind of a move to the upside, this is why I'm not really, super light, right? You get this move, you get out, and for right now, this looks like it's just going to be death by 1,000 paper cuts until it can really break this range. Say over 245. Over 245, you can play to this. I mean, these are such small crap, man. You got a bunch of supply here at this 245 level. Yeah, it has to get over 245. It's got a lot in its way, but if the market can turn, cool. What you would want to be aware of for sure on this, so weekly, you had a weekly squeeze starting to fire here, but you do have this that I do want to be aware of, right? Like a lot of Tesla bulls will see this, be like, oh, look, what's happening, right? I'm not a pattern trader. I am aware of them, but yeah, be aware. This is definite support, in this 250 to 2. Well, we have room down to 232 if we keep continuing lower, but we'll see. There's a massive gap to the upside. to 265. This was just a huge gap. Yes, this is a 30-second chart, I know. But, yeah, gap to the upside here. If you get over this 257, you're probably clean. 255, probably clean to try to fill that gap, actually, which would be a nice trade. The second that gap gets filled up, I'd flip, because you got this 1, 2, 3, 4 massive resistance that she's going to run into right there. So 265 to the upside. Trigger would really be, I mean, above 240. You have very small targets here right now. So right now, this is 15. Above 244, you can target 246. Above that to 247. Above that to 251. It's like $2 at a time until you get to 255. Over 255, then boom, you have a $10 target to fill that gap. And really, I'm going to take a look at this daily. Where does this land if I were to do like a retrace right here in that little pocket that we like? So, hence why I would be in favor for this gap to fill to the upside, and then from there, I don't want to speculate, prognosticate, but yeah, that's my gut. Sorry. All right, Meta, take a look. So to 137, huge level, right? So downside trigger at 155, we took that, right? Actually, we took it right here. And so target acquired, trade is over, right? So trade is over at 137. Take your money and run. The next time that you have a trade set up, it has to do this, right? Has to break below, come back up, retest, fail, right? That's what it has to look like. For now, no trade. Definite no trade to the upside either. Let's see. You are sitting on this 135. Here's the deal, right? So upside target, I'm just gonna pull this fib right to that, back to this 152, and this is that consolidation level right in here. So if you were to get a trigger long, it would be at above 140, call it 1, really above 142. And I'll show you what this would look like. It would have to look basically like this. So with a stop at 134, but max to 155, and then this downtrend. So you have a very pronounced downtrend. You could maybe target the top of this, and your trigger could be at 141. So it's a small trade, taking profit heavily at 153 at that 50% retrace, and potentially from there. Even if let's say this downtrend like breaks, I wouldn't take that. I'd be a seller of that, and I'd be waiting for this to retest and then take this, right? That's what I would want to see the upside. So again, patience, man. Super patient. Cool. OAH. Yeah, OAH was ripping, right? So OAH, huge gap. So you got, it's still downtrend, man. OAH. Yes, I own a decent amount of OAH. And I'm happy to see today's move, but I really need to see it, it's such a gap or two. Really need to see it continue. Because this 50%, I'm cautious, right? Might take a little bit off the table just after looking at this. 225, that's a big gap over the weekend. $15 gap. This is a very gappy stock, by the way, or ETF. It's got gaps all the way up to 250. But yeah, this is I gotta watch oil, right? So if oil rebounds, this oil services, this is your SLV. Why do I have so many lines on my charts right now? What is going on? Oh, fibs. Cool. 200 days coming up at SLV 38. Yeah, I feel like this trade is over, right? Same thing here. If you got that bounce, I did not. 35. I have this support. Boom, boom, boom. Cool. I don't think I sent this one. I mean, if you got it, it's a good trade. Let's see. Cannot get below 37.20. Here's the deal. This guy right here is imperative to hold above this little order block. So you're above it here. Actually, I mean, you know, if it has that kind of momentum, this 200-day could act like it could blow right through it if it does get there. Just be on your toes. I don't have a trigger quite yet. Take a look at Disney. So Disney basing 95. Look at this. So kind of like Disney here. So this is major supply in here. We barely tapped it the last time I entered this trade at 90. But if you're like a market structure dude, really, so if this is the low, if this is the last low, what I want to look for an entry, by the way, and this is a daily, is I want to look at where's the low right before the lowest low. And I have this guy, and it's really into this zone right in here, in between these two red lines. So right in here would be an ideal entry with a stop at 90. And look at that risk reward. Entering around 90, call it 92.50. With a stop here at 90. That's an amazing risk reward. And you're trading up to, let's call it this swing high. I mean, just at 105. Simple bounce, but that's $10. Good for an option trader, no question. And I like this order block right here. That kind of lines up. Yeah, 105, 106 really. So tomorrow, this is an inside day today, right? Tomorrow you have two triggers. So tomorrow, if you get a clean open above 96.30, right? First target, and you just start targeting these candles to the left, right? 1 to 97, right? 98, 100, and then you have some big gappers up there. Over 100, it's very likely just to go straight to 105, but this should battle for a little bit. So that's your trigger, over 96.30 on the day. Not happening today, not likely. It could. We'll see. If I drill in a little bit. Yeah, you're at 96.30. We're right there. Yeah, so Meta was flat. Setting trailing stops on oil. Yep, love it. Right, consolidating 2 hours now. What's the meeting today about? Is there a meeting today? We just have a bunch of speeches. Fed Manufacturing Index. No, we got a bunch of speeches. I don't see any meetings. All good. Let's do, so I know a lot of my peers, so I trade with like Exclusive and Wolf and Seeking Alpha and all of them. Like, we are on Spaces a lot, so if you it's actually, my Twitter's at Paper Gains Inc., so you go there, give it a follow. I'll typically retweet whatever I'm hopping on. Okay, so AMD, it had a nice pop out of the gate. Here's what's happening here. With AMD, you are running right smack into yesterday's high. That's an all done trade right there. So the only way you could really take this long again or think to stay in it is if it breaks back up above and goes like that. But right here, 65, 40 would be a stop, right? You do this a couple ways, right? Oops. So if you want to take pre-market low to today's high, right? A retrace, typical retrace would bring it to around 64.50. You could potentially look for a re-entry. And yeah, you can see there's a pretty clear order block right in here. So you have this guy. I say order block. I'm just looking at candles, guys. That's all that is. And it's like where are the buyers stepping in and leaving. 30-minute, you could see it pretty well without getting too faked out. Right here. That's about that 50, same fib retracement also. So it's Monday. IV is through the roof, right? So take the win. That's an awesome trade to the upside. You take a pullback if you want. I'm typically light. Tomorrow, if this is trading above that 65.88, you do have a continuation trade to the upside. Target 68, 50, and then up to 71 from there. But always want to be aware. What's the? I mean, man. Even just this is a 50% retrace right there on just that one candle. Huh. Where can I go? Let's see. Here's the fat order block right there. Yeah. If you get to 68, 69, you're going to be in trouble. That's a toughie. So targets above 66 and a quarter, you got a target to 60, just under 69. Above 69, you can targets up to 73. So this is the same thing, right? Like just a couple. Look, we're not trying to take big moves. We're not trying to capture any of that, right? Your job as a trader, my job is just to take a very small piece of an already happening existing move, right? I don't need to get the whole thing. Yeah. Tommy cracked me up. Cool. Oh, you're talking about the Fed emergency meeting? Yeah, I saw something about that. I don't know. So we got Meta, Disney, Tesla, Amazon. Last one. Amazon looked good this morning. Same kind of thing, right? I do use fibs, right? Like, but it's not like major. Like these are, I'm just last swing high, swing low. I don't usually pull this tool thing out, but unless I'm showing people. So you have clear resistance or support rather, 112. One thing I'll say about this market, look, we're not in a bull market. So do you buy at support in a bull market? I do not, right? I sell at resistance in a bear market. In a bull market, sure, buy at support, but be very wary and cautious buying at support in a bear market. I will just say that your odds are better selling at resistance. I know it's like a little counterintuitive, but yeah, and you know, I will say, hey, look, looks like we're gonna go sideways for a little bit. I'm just trying to pull a level here on this consolidation. So even if we do get sideways just a little bit, you know, you want to take some pretty quick profits to the downside on Amazon. Yikes. So if Amazon trades below 112.06, you absolutely have a target to 107 clean, right? This entire, like, this is probably the point of control for this lower consolidation. If you want me to take a look, I could, but that's my guess is where it would be. Oh, really? That's impossible. Oh. It's extending. Stop extending. Yeah, point of control actually. 109. So it's like this little range right in there. Yeah. 108.90. I am tagging this little wick here, right there, which is basically 108. If Amazon trades below 111.99, 112, you want to see it break a structure, so break below, come back, retest, and fail. On the fail, that's your trigger to the downside to 108. It's a couple dollars move that side. Otherwise, consolidation high. You're in a tough spot to go to the upside here on Amazon. You absolutely, really, if it's above 117, over 117, you got some nice targets to 121. I'll say that. Maybe to 120. No, 121. Above 117 to 121. In this area right here, this is chop zone. So this is straight up barcode. Don't think it's anything else because that's exactly what that is. Be very careful. Yeah, that's neutral trades all day. So, but over 117.50, I take it to the upside to 121. Below 112, I take it to the downside to 108. Those are good. Tesla, man, absolutely on watch. Is this thing flushing? Oh my goodness. I don't want to miss this down. This trade is going to be gross. You guys, this is like for the swing trade. If so, 50% range. I want to see this 265, and then I can really take it, right? But below this whole consolidation, I look at Tesla and I'm like, okay, Apple is starting to fail, which by the way we need to. Apple, SPY, so there's SPY, right? 52-week lows, right? Who's holding it up, right? We're still Apple, not quite there. You're at this kind of support level, so I'm not gonna. That's where like, okay, trade's over, right? If I wanted to do something at all, it would be more like condors at support. I think they'll chop. Yeah, below this 136, 137, you got some very tight downside targets to 132, right on this order block there. But this looks kind of downsidey. If we get this pop to 146, if Apple gets to 146 sometime this week, that's when I'd be looking to play back to the short side to 130, really to 135, potentially to 132, right around here. Otherwise, for now, cool, a couple bucks to the upside. But this is not at 52 weeks lows, right? Tesla has got down to 207 to get to the lows. That's a long way, right? We had AI day. I mean, I don't know if anybody remembers Battery Day. That was a major sell the news event. We'll see. For now, you know, the trade is more or less over, unfortunately, but it is what it is. I think I'm really just taking this. It's right in this consolidation level. So because it chopped in this area before, I don't expect it to chop again, per se. I do think it could flush through this whole level if we do get that trigger. So below 140 or 240, I'll take it. And I'll take it 10 bucks at a time to the downside. First target would be like 230, just for round numbers. You don't have to be exact. To 220, and then like 200. Well, 210. But yeah, you know, maybe the upside gap doesn't fill. I'm gonna have to just trade what's in front of me. But it's a big one. Big trade in either direction. It's coming. It's not here yet. All right, guys. SLB. Yeah, we did slop, so you'd have to rewind. Coming up on your 200-day. Could it press through? Yeah, it totally could. 38.50 is your 200-day. It's got some juice, man. I will say that. It's definitely got some juice. Trigger long 35, so it's a quickie. Yeah, if this makes this new high, like here's the I'm just gonna make this. If you break this high, 38.27, when this kind of stuff gets to this 200-day, it's kind of violent, right? Like it could poof, right? And then it'll do that. It could go way here. So just be aware. These are like quick trades. Oh man. My target on this guy is really like up here legitimately, but yeah, you tag that lower end of that broadening formation. Right back in here. Look, if it goes higher, 41, and then you have some serious room to the upside above that 200-day. So just remember, everything around a 200-day tends to get choppy. You got to squeeze looking like on the daily, looking like a squeeze on the weekly too. So yeah, I think you'll be all right. Cool. All right, boys and girls, that's it for me. I'll see you in there. And all right, that's a wrap. Adios.